Welcome back to Trading 360. I'm Nicole Petalides, live in New York City. Thanks for being with us. It's time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Jessica Inskip, Director of Product and Education at Options Play. Good morning to you both. Thanks for being here. Let's start off with Costco. We have a week of busy retail numbers that we're going to be focusing on. Jessica, tell us all about Costco. Your thoughts.
Yeah, so Costco is absolutely a defensive play, but it has a very different business model. So aside from just your typical grocer and staples, they have that revenue model based on memberships. So I think that will definitely be positive for them. And additionally, they tend to perform very well historically in a high inflation environment. Now that was captured with high inflation environment over 3%, and we're definitely well beyond that, if you will. But since they perform so well in that type of environment, I think it's a good defensive play.
Yeah, and while they may be receiving a lot of headwinds, you wonder what kind of tailwinds they may have at the same time. You mentioned the membership. I mean, that's recurring revenue, something like that. What do you think of the Costco chart, Ben?
Nicole, I think price activity as of recent more reflective of those tailwinds. If we could just dive into the move that we've seen off the October lows, we're talking from 449 all the way up to 520 to begin the week. Just taking a look here at the hourly time frame, you can see a pretty well-defined trend. There's again that low from back in October, as I mentioned here, and the run-up holding this upper level. Taking another step back here shows you on the daily time frame, actually this is the 4-hour, how we're kind of right in the middle of a range that we established. We're going back to the highs from back in the end of March, beginning of April, up around 612, down to the lows that we saw in May around 406. I think what's noteworthy on this chart is take a look here how this low, we're talking the October low, again around that 460, 450 area, held above the May low. So I think that's key because the broader market was coming under pressure. And so stocks that were able to do that remain strong relative to the broader market. Another step back shows this range that we're looking at here, 612 to 406. I want to point out here it is. It's part of this bigger trend that we've seen. So you see balance occurring right now. I think the bulls want to see basically a breakout to the upside, right? They want to see, again, a new area of balance form at a higher level. The bears, that's what the bulls want. The bears want to see this thing start to come off, right? And they want to see it take out this key level, the middle of this range that was established. So right around 350, everything above that right now is very much supportive of the bull trend to the upside. Just wanted to quickly take a look at where things stand in terms of the bigger picture here as we take a look at the daily time frame and net change, where we stand in terms of the 50-day moving average, that blue line, so we're above it, just above the 200-day moving average. Take a look here. Year to date, I mean, this stock significantly, as I mentioned here, it's done pretty well compared to the broader market. As I take a look here, we're down fractionally relative to what we've seen in the broader market year to date. So you can see also this area consolidation, again, that we were just talking about, 400 to 600, and a pivotal area kind of right in the middle of that range right now.
Yeah, I like those charts, Ben. They look great. What do you think, Jessica? I mean, we saw that low at 406 and the lower low and the highs that were possible. So more tailwinds or headwinds here, Jessica?
I'm hoping it translates over to tailwinds, but the trade that I chose was a bull put spread. So that's something that is neutral and has a bullish bias. So I just needed to stay right where it is and capitalize on theta decay. And what I'm thinking is if we've got plenty of time now until, well, we do have retail earnings, but until Powell tells us what he's doing with the environment, once again, there is not too many headwinds that can come our way that can cause the broader market to go down. So I want to capitalize on that theta decay until we get to that point, utilizing those support and resistance levels that Ben called out. So selling the 515s, buying 500s, collecting about $4 worth of premium.
Yeah, understood. Are you feeling that way about many of the retailers, or do you feel like Costco is something special, Jessica?
Costco is a little special due to that differentiation of the business model. Just like you were saying, they have membership fees, and that's going to help profit margins, whereas others are going to see more pressure on profit margins. But I wouldn't necessarily put Costco in discretionary, more staples, so that's naturally going to help them be a little more defensive. But I am concerned with the broader discretionary sector. Absolutely.
Right, understood. Okay, and then the next one is TJX. That's the parent of TJ Maxx and Marshalls, also in retail. Tell me about this one.
Yep. So what a great segue into consumer discretionary. So they are reporting earnings later this week before the market opens. And I anticipate that they would do rather well. If you recall, earlier in the year, there was a huge issue with excess inventory. And you know who benefits from those is discount retailers. And then additionally, if we've got a Fed or a restrictive Fed that's trying to tackle demand and lessen the money supply, if you will, discount retailers tend to do a little well. We saw that translate over from the staples side onto Dollar General and things of that nature. So I'm hoping that same thing plays out as we look at TJX. So this is largely an earnings play where I believe that they'll have good earnings due to that excess inventory that they benefited from.
Right, understood. What do you think, Ben, when you take a look at the chart for TJX?
TJX had a big breakout last week. It's holding the upper level for the most part. This is in continuation of the trend we've been seeing to the upside. And again, this is a stock that's done pretty well off the fall lows. We're talking about back in September around 60. And I've got my eye here first and foremost in the hourly time frame for a look at the intermediate. You can see three really well-defined areas of consolidation forming, possibly actually a fourth right now in terms of this most recent area after the breakout last week, again up to that $75 level. This was a high conviction move. This is what the bulls were looking for in terms of continuation of the pattern we've been seeing, and basically again a follow through, simply put, and zero rejection as of yet in terms of this upper level. Now I looked at the bigger picture here in terms of the daily, and keep in mind auction market theory principles, the idea that we're either in a horizontal phase overlapping and rotational forming value, or in a vertical phase seeking value either up or down. Those theories teach that the same kind of areas and formations that you see on a granular 5-minute, an hourly time frame, you're going to see them playing out on a daily and a weekly. So basically you're talking about the aspect and the high conviction trade that we were just talking about in terms of the move up out of balance and accepting that level last week. You can see that playing out here in terms of the move off the pandemic low, high conviction trade to the upside, sideways consolidation, upper and lower extreme around 54, 78. What I see is high conviction through the middle of this balance, similar to what we saw last week, which helped TJX break out to the upside. So the bulls have their eye on this 78 area, taking a quick step back from this daily time frame and just looking at where things stand in terms of the 50-day, the 200-day moving average. RSI very much supportive of this move up. You can see here again as we look at TJX, another instance where this stock here down only 2.5% year to date versus the broader market. This one's fared pretty well. Also another instance, a stock that's fall lows held up above lows from earlier this spring around May. They traded down to 53, recently testing that down around 60, but that held. So a stock that's done really well versus the broader market here.
Yeah, understood. Great chart there, Ben. Jessica, your final thought on TJX with your trade.
Yeah, so this trade's a bull call spread, buying the 70s, selling the 85s, and it's going to cost me about $5.15. Since this is an earnings play, theta decay or that time value, extrinsic value is absolutely working against me, and because I'm purchasing it. So that's why I chose my long strike a little bit deeper in the money to take into account that extrinsic value that I'm purchasing and lowering my risk exposure. So that's the important component from the trade aspect here.
Okay, and last but not least, looking at Alphabet, where we just were talking about the recent run-up we've seen in tech. We've actually seen a recent run-up in many of these names, but tell me a little bit about Alphabet and where you think we stand now.
Yeah, so this is very different from those other trades that we've discussed today. So it's this larger social media war now that we've just had the midterms come to their conclusion, and now we're looking for fiscal policy that will come in and adjust the markets. That's something that will be interesting to see how it plays out over time. How that relates back to Google, there's been a lot of talk about TikTok, if you will, and that's something where we've got even Biden in China right now, and there's concerns with the data usage of that. So the thought is, who is going to take that market share? TikTok has taken market share from Google, Meta, anyone really in that social space at a trajectory that's absolutely unheard of. And so just going from TikTok that themselves, I think that's the best place to get information, is where those people are really creating their accounts, and they keep calling out YouTube Shorts and Google. So therefore, the way that I want to play this is a longer term play. It's something where I want to sell sell cash covered puts and really reduce my risk exposure over the time. But it's something where it's got cheaper valuations. It's 8 times next year's earnings relative to the S&P 500. That's a little bit expensive because it averages about 17. NASDAQ's higher in the 30s. So it's cheaper in comparison to NASDAQ, more expensive from the broader market. But if you think of the bigger picture of what will happen with that social media space, Google would be a good contender.
Yeah, interesting. You said going deeper, and you have this till December 30th. Your thoughts here, Ben?
Well, this is a stock that's in a little bit of a different scenario in terms of the two names that we just looked at, some of the strength we've seen off the fall lows. And if you take a look at the chart, you're going to see exactly what I'm talking about. In this instance, we're looking at top left corner to bottom right corner, middle of August. You can see how shares of Alphabet, Google were trading up around 120, 125, and you can see the declines all the way down to this $83 level. So a little bit of a bounce off the beginning of November lows, back up to 96 recently. But you can see possibly just kind of forming this area consolidation, upper extreme 98, lower extreme being 83. I wanted to quickly just take a look here at the daily time frame and just kind of show you that this move that we just looked at, part of the bigger picture move that's been going on. This goes all the way back to January, up around 151, again down to the recent lows. But look what I went ahead and just drew a couple balance areas for us to kind of take note of in terms of what we've seen. So 3 areas of consolidation that formed at lower levels. You got a breakout to the downside, which again, kind of losing momentum. But I think in this instance, there's a few different scenarios that could play out here. You either have, well, let's take a look at, well, we could see a new area balance form, number 4, right? That's what the bears want to see. Or we could see a situation play out here where this is just a breakout and we're forming a larger area balance, number 3, again, upper extreme 105 down to this 80, 85 level. But I do think either way, this is a bit of a bearish scenario right now. This is going to be a pivotal zone to keep an eye on, that middle zone right around this 95 level. But yeah, unfortunately, let's just take a quick look here in terms of the bigger picture. You can see how we're hanging out below the 50-day moving average, below the 200-day moving average. And well, as I take a look here, this one, again, a bit of a different story than what we've seen as far as the other two. We're down about 34% year to date.
Yeah, below the 50-day, below the 200-day. You talked about the bearishness there that we're seeing. I mean, I know we're seeing a little bit of a comeback, but there's certainly still some jitters. Jessica Inskip, thank you so much. Wonderful to see you, Director of Product and Education at Options Play, and our own Ben Lichtenstein, host of Futures here on the TD Ameritrade Network. Thank you both for being here this Monday. Appreciate it.